All right, so let's get started with the disclaimer before we get. All right, the information, context, opinions which are expressed in the presentation and on the following slides are solely those of the presenter and not necessarily those of Vantage, and are solely used for educational purposes as they do not constitute investment advice and/or consultation on how a client should trade. Vantage does not guarantee the accuracy or reliability of the information provided herein. All right, by your host, I'm Giovanni Benacourt, a senior market analyst, market educator, and demonstrator of strategy with Vantage, bringing over 20 years of experience as a commodity trader and holding a Series 3 license, also a CMT candidate. The agenda for today, we'll be looking at what is moving the markets, identifying key levels of support and resistance, and trading with Fibonacci tools. About Vantage. The Vantage ecosystem offers over 1,000 instruments, over 100 chart patterns, over 100 technical indicators and drawing tools. We offer CFDs on Forex, indices, shares, commodities, and cryptocurrencies. What we stand for: lightning fast execution, award-winning 24-hour support, top-notch security, secure funding management, strict regulation, global connectivity, to name some. All right, I'd like to begin by sharing some of my ideas. Identifying clear, consistent trading habits is highly recommended. Being comfortable with the prospect of losing money if the market goes against you, that is also something you're gonna be facing anyhow. So you might as well get comfortable with it. I like to emphasize risk management, and one way that I do it is by risking using percentage wise. So on a $10,000 account, if I'm risking between 1 and 2%, that means per trade I'm risking between 100 and 200, and I'm looking for a win ratio, reward risk ratio, 1 to 3. Okay, so that should give you a nice coffin of profits. Now, volatility can spike and spreads can widen, so using leverage is highly recommended. You can do this by going to your client portal, going to a trading account, selecting the account that you're going to be trading under, and going to the little wheel that is on the lower part of the account. You can change that leverage, and also you can change your password. Sorry. All right, let's continue. The use of stop loss is highly recommended. You just never know when markets will whipsaw. When you create your trading plan, you're going to include ways to identify trends, timing your entry and exit points, risk management, and confirmation validation, just to name some. All right, I think it's important that we share a common vocabulary for what is technical analysis. So let's dive right in there. Now, is it just a form of data visualization? Obviously, charting, displaying market data in lots of different data visualization modes is a big part of where technical analysis came from. But you do got to go back a couple of hundred years to the rice piece of Osaka, Japan, for a gentleman named Murohisa Homa, who invented it, the candlestick charts. The Japanese candlestick chart. He wanted to, as a way to try to capture all of the behavior of traders in those rice pits. Of course, we've advanced the discipline over hundreds of years, and there are lots of different chart types. But I'm going to argue to you now is that technical analysis is far more than just collecting data, and it's displaying it in a way that we can interpret a lot of information quickly. Now, that is part of it, but if you look at what the definition from some of the very early texts from the 1920s, 1930s, that says technical analysis is about the study of the market itself, all of that price action, all of the investor behavior, everything that's happening in an open, freely traded market is part of our discipline. And I love that definition because it is quite broad, and hopefully through today's session, you'll understand just how broad the depth of study that you go through. We also know that technical analysis is the study of that supply and demand relationship. We care a lot about the behavior and the psychology of investors, and it's one of the hardest things to quantify when you're thinking about investment decisions. I'll argue that is all represented in this beautiful little element called price, which we can call it also a systematic evaluation. In systems, the reason I bring this quote up is that a lot of us have heard about algorithmic trading, high frequency. You might be an advanced programmer, you might know Python or R or many other languages, and that is an important way to express some of the ideas. But even if you're not a coder, you're not an algo trader, you should be thinking in terms of systems, a rules-based, repeatable approach. And that's something that was drilled into me as I spent time surrounded by some of the best money managers in the business, is that they have a defined repeatable process or a system that they do follow no matter what the market is doing. A quick refresher from your 101 class, economy 101 class. Remember, at a fixed rate of supply, an increase in demand is going to move us up the price equilibrium, or a decrease in demand will price down the equilibrium. So when we are thinking about an open freely traded market, demand, greed of investors is inherently pushing prices up, and fear or selling pressure is going to push price down because it's a fixed supply. Now I want you to hold that thought in your mind, because it's perhaps one of the most important parts of the magic that we're trying to unlock here, or the message of the market that we're trying to decode, which is related to learn that if you take emotion, the would be, the could be, or the should be out of your decision making, and if you look at just what is happening and you can quantify that, you have a big advantage over most human beings. I would argue for all of us in the investment discipline, there's a lot of emotion tied to those trading decisions that we make each and every day, and those emotional impacts on our decision making can be very negative. So the more you remove your emotional and cognitive bias from your decision making, the better chance you have of staying on the right side of trends. All right, let me now I'm gonna stop sharing my screen for a second, and I'm gonna start sharing my charts with you so that we can start looking at the markets. Hold on for a second. Okay. You should be seeing my charts now. All right, fantastic. Okie dokie. So here we have in front of us, we have the daily candlestick chart of the Nasdaq 100. And just to refresh your memory, so this yellow line is a 3% correction from the all-time high, which basically that's what we were contemplating that the market will do, a correction. And precisely last week on Thursday, the market almost came to that 3%. From here, we could say that that was the bottom for that time period of the market, from that correction. And from here, it rallied again towards that all-time high. We've seen market fluctuation since then, trying to sustain itself around 25,000. The blue line here is our pivot point, or our typical price. And this typical price, we obtain it by adding the high, the low, and the close of the previous day, or the previous hour, or however you want to apply it. And you divide that by 3, and that will give you the typical price, which is also used as a pivot point. And that typical price is what will be the most traded around the traded value. And also the VWAP, or the volume weighted average price, is also derived from that mathematical equation. All right, but it's obviously based on volume. So you'll see that the market will fluctuate around above and below that, and just like it has done so. So today, being this first of the month, and the market obviously received the news that we were actually expecting for the market to do, which was what we were expecting, that the government shutdown in the United States. Now that the implications for the market itself, that really doesn't matter that much to the market. The most important thing is gonna be that on Friday, the non-farm payroll jobs data may not be published because that is a government agency that does print out the that data. But as far as the Fed, for them to decide and to meet all that stuff, they continue to work because they're not part of the government per se. So that should not have an effect. The only effect will be usually on the data information coming out on Friday. Today we did receive the ADP jobs, which are private sector, the private sector jobs data, and it came actually negative. They were expected 45,000. Let's see, which it was Wednesday today. So it didn't. Let's see what this is. So today, Wednesday, 1st. Alright, so this it didn't come. It didn't post here on this. But anyway, the ADP number was also about a jobs creation, and it was expected to be 45,000, but it came out our negative 31,000, if I'm not mistaken. So we could contemplate the idea that on Friday we'll have another lower number. The expectations for the consensus for that non-farm payroll number on Friday is 50,000. So could we see an even lower number than the prior month of 22,000? If that happens, then you want to be looking at the market and seeing that will be also an indication that the job market is cooling down, or obviously unemployment rate could rise, and that will be a catalyst for another rate cut. And again, indices love rate cuts; they like rate cuts, so we could probably see a speculation to the upside on that particular day. Now let's talk about today's market fluctuation. We had during the London session, we did have a negative or in the red session. It did fluctuate lower towards our second level of support we had just used yesterday, but it didn't. It rejected it. It didn't actually touched it, and now it's retraced. So let's see if this momentum to the upside will be sustained. And again, I'm looking at the markets today to perhaps just do a little bit of a short off and just do another correction, because we have been obviously fluctuating to the upside, and basically earnings season was over yesterday. Nike was the last one to report, and so let's see what will happen this month. September usually has been historically a bad month for indices, but not this one. So will that change in October, be that month? I don't know. We'll see. But for right now, what I'm speculating or what I'm looking at here is that we'll see during the if we were to open right now, we'll be opening to the downside, obviously, because we're in the red. But obviously, we are contemplating speculating that the market will recover and make another attempt at our levels of resistance we have placed yesterday. So I'm going to leave my levels as they are, and the support, I'm going to leave the first level at 24,600, and then I'm going to use this swing low from Friday. So that will be the levels for today for the Nasdaq. As far as the S&P goes, well, that yellow line again is a 3% correction from the all-time high, and we're pretty far away from that. But I like to keep it there just for reference, so we can see if the market decides to do a strong or start doing a correction. We can expect at least a 3% correction. I mean, we could go 10%, and then obviously after that, if we are in a 20% correction, we are in a bear market, technically speaking. So the market today actually also did a little bit of a head fake to the upside, looking to recover or just revisit those highs, but it didn't do so today. During the London session, it did again fluctuate to the downside. So I'm actually in this particular asset, I'm going to use the range that it created during the London session as my levels of resistance, and I'm going to come here and just identify that swing high, which was basically double top, to use it as a resistance level. As far as support, my second level of support, well, I'm gonna use the what is candle open and this candle closing this one open. So and look, and it's actually a psychological round value 666. Then we have the Dow again. That's the 3% correction from the all-time high. And the Dow has been ranging, basically is in balance within the entire week. So this is a great setup for a possible breakout or breakdown. So I'm going to favor a breakout. Now, obviously, we want to be able to have some resources or some reasoning to break out. And what would that be? Valuation of the market, obviously, is still there. So the company's valuations are still strong, and it's just basically sustaining that valuation of across the board. So another attempt at 47,000, perhaps. Let's see what will happen. Then we have crude oil. So crude oil has been on a tear. Obviously, this is basically an influx of supply. So demand is there, but supply is meeting that demand, and so therefore we are pushing. Prices are pushing lower. So I'm going to speculate that today we'll continue to look to push lower, and $61 will be the ultimate low for today's fluctuation. I'm gonna just use the 20-day moving average with the Bollinger Band as a possible level of resistance. $63 is where the market fluctuated towards today. $63. That's where it was, as you see that. Okay, now we have here our levels. Basically, we're looking to sell the energy or the crude oil. Nat Gas is in a strong momentum to the upside. Has it opened twice with a gap up. So yesterday it opened with a gap up. Today opened with a gap up, and we'll continue to push higher. So demand for Nat Gas is going to actually increase as all of these data centers are going to be online. Obviously not right now. They've been built, but there's a lot of them already online. So just from that side, besides all of the demand for everything else from heating and cooling, but also that the European Union is going to start obviously not purchase Russian crude oil and nat gas. So that will be I'm looking at nat gas to continue to push higher. So let's see how much higher are we going to be pushing. So I'm going to use today's swing high during the London session as a possible level of resistance, and 1318 as my second level of resistance. Looking for if this continuation of to the upside moves higher, 320 could be the target. After all, RSI is far away from entering overbought, so we still have a long way to go before it enters overbought territory. All right, gold. So gold 3,900 is coming towards that level. We're shy of it by $5, actually $350 actually. So that would be that level that we most likely see. Now here's one thing that we could use. Let me get the drawing tools here. I went to my tools. Okay, there. Okay. So I'm gonna use the trend-based fib extension, and I'm gonna measure this rally from Monday to today, and where is the 318%, 0.618% visibility? It's just this two right here. Okay. All right. So 3,900 as a possible level of resistance, psychological, and I'm going to use the golden proportion of 0.618%, in this case 61.8%. So looking to make up to reach obviously the that milestone 3,900, but actually 4,000 is how I've been looking at how soon we can get to 4,000. So this month, as we've seen that the geopolitical uncertainty continues to be online, I mean, heavily, and there are other scenarios around the world regarding that, and also inflation and all of the tariffs scenario. Gold is basically has always been that safe haven asset, and it's just going to continue to push higher. I'm going to use 3,800 just because it's a psychological value, but now are we going to come down towards that level? We could. I mean, also gold has strong fluctuations, but initially 3,900 to be tested again and doing another pullback as it's doing so right now. Let's see what will happen. But buying gold. Then we have silver. So silver is getting closer to its all-time high. Its all-time high of silver is $50.50, and that is obviously somewhere that we could be hitting it this month. I'm going to speculate that silver will be hitting $50.50 this month, and obviously revisiting that all-time high. And that all-time high was made back in 1997, if I'm not mistaken. So that will be obviously our trajectory. Now, as far as level of resistance for silver, let's use also the this week's momentum and see just how much can we speculate where the market will come. So 60, the golden proportion is right there. So let's just use that. I know it's a tight range, but $48 it is psychological, and most likely if the market does come to it, it'll do a pullback off of it. Profit taking obviously will happen, and so that will put bring the price down. But then afterwards, I'm going to speculate that it will continue to push to the upside. We do have a good momentum right now in that, and we are obviously outside. We are in the overbought territory in the RSI for this asset. So let's see what will happen. All right, so let's do $46 for today as our first level of support, and then our second level of support. I'm actually just gonna use this swing high from Thursday as my second level. Going long, buying the metals, silver and gold. Copper's all-time high is also $5 and change. So I'm going to be hitting $5 for copper this month. I'm going to speculate yes, because copper also is going to be in high demand. Silver, demand for silver because all of the EVs, all of this green energy and all the appliances that it is used for. And copper, obviously, also our homes and it's just a greatly demand. So $5 again, revisiting that all-time high this month is not far-fetched. So that's what I'm shooting for this month. As far as our levels, since yesterday they weren't really met, I'm gonna leave them the same, and we basically right smack in the middle of it. So right now the market is doing a little bit of a pullback and a retracement. It did a pullback, and now it's retracing back into that 480 handle. So let's see how much more of a pullback can we see. I mean, the market is showing us that it makes a parabolic move, then correction or pullback, profit taking, parabolic movement. So can we speculate today that today is going to be one of those days that repeating the history, or is it going to be that today is going to decide to just push all the way higher? Let's see. Again, it's a new month. All right, Bitcoin. So Bitcoin is breaking out. So Bitcoin moves by thousands. So I'm gonna just use psychological round values, 118 for my first level of resistance, and then just 120. 125 is that all-time high, around 125. So when we see Bitcoin at 150,000 this month. It's very, very likely. Very likely. So I'm just gonna do a tighter support here for it. Then we have the currencies. All right, so the currencies, we have the currencies here. Pretty wide fluctuation for the euro in this scenario. So I'm gonna leave 118 as my second level, using today's range, London range, as my first level of support, and my first level of resistance, and first level of support, and then 117 as my second psychological values on both sides. So we did had a nice fluctuation to the upside, then a recovery after pulling back. All right, the pound now in a parabolic movement, strong momentum to the upside as we've seen being met. So I'm gonna use 135 400 ish, and then as far as my second, 135 600. Nice parabolic movement on the pound here. Let's see, the dollar index is dropping after that. That is one of the things that we should continue to contemplate, that the because of government shutdown this asset is gonna be suffering because of that government shutdown. Now, how long would that last? We don't know, but the Democrats are just doing it just to mess with Trump at the end. So let's see what will happen. So pushing lower the dollar index, especially even though the open gap up is pushing lower now. So 97 is going to be a target. As we hit this value of 97, we should see a nice momentum push to the upside of the currencies and the metals. All right, now that I have done this on an hourly chart, because these are the levels of resistance support that I identified for the day, I break it down to 1 hour just to get a feeling of the momentum being in the market for this particular time, for the day. So I see that the last 3 hours the market has been pushing lower. So can we contemplate that this is basically just profit taking, obviously rolling over for the month, rolling from September into October by futures traders? That's also the case. But if you can take a look at what the market is doing in this scenario throughout the London session, it was basically flattish. It opened, it fluctuated to the downside, it made a low, and from here, from this low, it swing higher, and is now retracing. And basically, in this previous hour, it was that low was basically met. So can we speculate that the market will open to the upside or start recovering? Actually, sorry, we're in the dollar index. All right, so for the dollar index, yeah, a drop, continue dropping in this scenario. So Nasdaq. All right, so Nasdaq last 2 hours to the downside, but it had a strong momentum to the upside on our last hour, on a previous hour. So we are fluctuating around the 20-day moving average, and I'm going to speculate when the market opens, or actually the market already open, we're gonna be looking pushing higher. So we obviously want 15 minutes to for the market to settle and just opening to the upside. All right, so the same thing for the Dow, for the S&P. So looking for momentum to the upside, looking to see how strong the market will fluctuate. How strong? Well, the Dow is showing us how strong. Nice rebound of the 20-day moving average to the upside. So long positions in the indexes. Crude oil. We talk about shorting crude oil, so we're gonna be looking to sell crude oil. So in this hour, in the last few hours, we'll be pushing lower. Okay, Nat Gas. It did have a particular wild fluctuation, wild swings here. It is profit taking. Let's see if this 20-day moving average has given it that support. And if you look towards your left, that level, it has been a level where resistance has been met previously. So this could be a reversal entry long, right? Reversal of the 20-day moving average could be. Let's take a look at gold. All right, so gold also looking to fluctuate to the upside, looking for a 3900 marker today. Definitely, that's where the market is going. Is going to hit that 3900, at least that 3900 marker today. Then we see in silver, nice momentum to the upside. This push to the upside is being sustained. Copper, recovery mode in copper after having a few hours of momentum to the downside. So let's see how much more of that will be. And then Bitcoin just consolidating, getting ready to make another leg up. So nice setup for a breakout or breakdown. The currencies, all right, as the dollar index continues to push lower, currencies are likely to fluctuate. So 118 for ultimate target by the end of the day for the euro, and the pound. All right, so fluctuating above 135, nice momentum, walking the upper Bollinger Band. So our targets could be met. Now that I have looked at the momentum being built in the assets, I go down to 5 minutes, and here's where I start looking for trades. I turn on my fractals, I turn on my VWAP, I turn off my Bollinger Bands, and I start looking for setups for entries. One of the entries that I do like to use a lot are those reversals of the VWAP, but in this particular asset, okay, it hasn't. There it goes. All right, so this particular time, we just basically open. All right, we want the dust to settle and see for us to obtain a range. 15, 30 minutes. Some people even wait an hour for the entire range to be set. But the momentum throughout the day is to the upside. So I'm looking for trades to the upside. In this particular case, if the market was already had settled, in this particular case, and the momentum is to the upside, I'm looking for entry longs. And I will be looking for those pullbacks into the VWAP, which is the blue line, and from here entering long to see if it does. Now, this particular market is building momentum, so 24,900 is our target. This is the pivot point that I spoke about earlier today, and the market does fluctuate towards it, above it or below it. So, in giving this a scenario, I want this a possible entry long would be for the market to continue to push higher, fluctuate or break that pivot point, fluctuate above that pivot point, do a throwback to the pivot point, and from that throwback, a reversal long, and that will be my entry. This will be my entry right here, and that entry, if I entered this at this point, my target being 24,900, and my stop being that swing low of that previous candle, right below, a few pips below it, I'm having a risk reward ratio of 2. So if I'm risking 100, I'm looking to make 200. Okay, I prefer a risk reward ratio 1 to 3, meaning that if I'm risking 100, I'm looking to make 300. So, and keeping my trades to low numbers. 8 is a good number to keep in mind. So that is a possible trade right there, setup, possible entry setup. Then we have the S&P. So the S&P, again, doing a pretty good momentum to the upside. In this particular asset, I don't have the pivot point or the typical price identified, and you can do that if you want to by adding the high, the low, and the close of the previous day and dividing it by 3, or the previous hour if you want, or however you want to. But the shorter you do it, the more noise it'll have. So keep that in mind. All right. So in this particular asset, the S&P 500, again, just I'm waiting for the asset for time to run 15 minutes, so the dust can settle and having that range. So, but overall, looking to go long the asset. Then we have Dow Jones that opened strongly to the upside. It had been ranging, consolidating for basically the whole session of the London close, and it broke out to the upside. So 47,000 by the end of the day, maybe not. I don't know. Let's see what will happen. All right, so crude oil. Oh, reversal. That's a reversal candle. All right, hanging man. That's a reversal candle. I mean, obviously, we could have said inverted hammer, right? But that is a reversal, and obviously, let me see when the VWAP will load. We are below the VWAP, so in this particular candle, in this asset, entering long right now, it opened with a gap up. It has been closed, so entering at the market could be an entry and targeting the initially the $62 psychological value. So let's see what will happen. If it does happen to fluctuate into the VWAP, then obviously I'll be looking to enter the VWAP and looking the VWAP to be my target. Now the Nat Gas. All right, so Nat Gas here is God, this we're having a great setup. So the market actually fluctuated lower, rebounded off the lower band, and it would have been a great entry long position targeting the VWAP. In this particular asset now, I will have to wait for this candle to basically in 15 seconds. So possible entry long again, targeting the upper band, because we understand that we are pushing higher. The Nat Gas is in an uptrend intraday. So I would have wanted for this candle to have closed above the VWAP for me to have entered. Now that it has fluctuated above that, I could enter the market at that swing at where is that right now anyhow. So I'm going to target that upper band, the upper band around here, and then the stop. I'm going to use this swing low here as a possible stop. All right, so short trade, scalp trade. All right, risk reward ratio is 183, so not bad. All right, gold. All right, so gold is fluctuating around the VWAP. All right, so in this particular asset, I do want this candle to close above the VWAP. All right, and I will enter it long. And obviously, if it does close above or around this one close and this one open, it will be greater for me, more of a strong conviction. All right, so let's wait. Actually, it's 3 minutes and 40 seconds in this candle. Possible entry again on this particular candle to the upside. Being long gold, that's what we want anyhow. All right, silver, parallel movement is running. So you'll be chasing the market right now. The only possible trade that I will be seeing or contemplating is that if the market happens to fluctuate back to what now is support and do a throwback and then does something like this, that's where I'll enter at the so this candle will have to fluctuate towards my support, and then if it closes at the support, enter the market long. But the market is running actually, so you'll be chasing the market, and that's not a good idea. That's that FOMO. So anyhow, let's just wait and see if it gives an entry. All right, so copper, possible entry long again also, as we want this candle to close above the VWAP. Take a look at gold. All right, so this one is fluctuating higher. I mean, it is making equal highs. Well, now it's breaking out, so the target will be that fractal high, and you could enter the market at the market. You just enter at the market and just target your. I'm just gonna say, let's say for example, I enter here. I'm gonna target the upper band, and my stop is gonna be that swing low previous. All right, let's take a look at Bitcoin. So Bitcoin, all right, so it's consolidating, profit taking on Bitcoin, getting ready for another leg up. Currencies, all right, so you see, this is why I love using the VWAP. The VWAP gives you entries, reversal of the VWAP, targeting the upper band. Right now, that would have been a great entry position to the upside, but it's past me already. Then we have the pound here. All right, again, consolidation, waiting ready for another breakout, and we want that to happen as we see that the dollar index continues to push lower. So as we see the dollar index pushing lower towards this fractal low, we'll see a nice strong momentum to the upside on the rest of the things. But let's take a look at the Nasdaq now. All right, so it didn't happen, or it hasn't happened, because this is something that we wanted to do, to obviously do this throwback. If that would have been the entry, but we haven't seen that yet, because the pivot point again is working as a dynamic level of resistance. But we're still waiting for that one. Oh, the S&P just rallied. It's rallying. Dow. So we should see the Nasdaq also rally. All right. Then we have crude oil. Not much. All right. So this is telling me that sellers are pushing prices, are sustaining prices from moving higher. So we could probably contemplate a breakdown again. There's gonna be a fluctuation to the downside. This right here, 2 dojis, actually 3 dojis back to back, telling us that buyers are trying to sustain the price of continue to drop, but they didn't have that much of strength to recover from this decline. And actually the volume is pointing towards more sellers, and we're at the lower end of the RSI. So contemplate an entry short here. All right, so this particular trade was a bad one, took us out on Nat Gas. In this particular trade, we're still in it. This is our stop down here. So all right, so we have that throwback to the now will be support, and here would be an entry long. So entering long here and targeting 47.9 psychological values. Stop that previous swing low. So we're looking to push higher. Copper. As copper retraces and into this this volume cluster, right? This right here, or this level of support, that's where I would be contemplating an entry reversal long, targeting initially the VWAP, ultimately the upper band, but 480 could also be an early. But we want this market to push lower and just reverse, just like it has done here before, prior, once, twice, 3, 4, 5 times. Bitcoin still just sideways movement. The euro on the upper band, so it's getting ready to do a nice little breakout. Pound, profit taking, consolidation, getting ready for another leg up. Well, those things will happen if the dollar index decides to continue its decline until this push higher and the dollar index, it'll put pressure on the currencies. All right, guys. Oh, actually, the Nasdaq trade isn't gonna happen. This puppy just push lower. But the pivot point acted as our level of resistance. All right, so 15 minutes, we have a swing high, we have a swing low. So that will be the range for the S&P for today. Now, if this candle found that support at the upper band of the VWAP, or is it going to penetrate the VWAP and just go down all the way to the blue line, which is the VWAP? So this was expected. Profit taking. All right, so that breakdown on crude oil is happening. So entering position short, targeting that lower fractal or our level of support, 61.5. Nat Gas is losing its floor, its footing, so fluctuating lower. But that was just profit taken after doing such a strong momentum. All right, we're still in this gold trade. I think this probably might just reverse on us and then just do a little leg down. All right, so in this particular case, silver has retraced, doing a strong sell-off here. Silver. All right, copper pushing lower. Let's see how much lower it will push. See if it hit this level, and from here to a reversal. 18 seconds, 17 seconds, possible reversal long of the lower band. And this 5 minute, in the 5 minute candlestick. I mean, you could also go down to 100 ticks, and that will change a lot. It will clear out the noise. We have minutes 1, 3, 5, and we have 100 ticks or 100 pips, if you will. So if you want to manage your trade by ticks, this will be one of those scenarios where you can. Each candle is 100 ticks. Okay, each candle is 100 ticks. So that's the use of it. The same pattern will form. It'll be more organized, more in tune. All right, Bitcoin in this 100 tick chart is basically whipsawing. The euro. Oh, the euro just lost its footing, pushing lower. And the pound must be doing the same. Dollar index must be recovering. Yeah, dollar indices must be recovering. Yep. Push to the upside on the dollar index. All right, guys, that'll be it for me. Every single day we do this from Monday to Friday. We take a look at the markets of the assets that I follow, which are Nasdaq, S&P, Dow, crude oil, Nat Gas, gold, silver, copper, Bitcoin, euro, pound, dollar. The VIX, I have it here. Oh. So this one doesn't have fluctuation by 100 ticks. Let's take a look at the VIX. No, it's not. There it goes. So the VIX, we've seen the VIX in low volumes. I mean, once you see the VIX above 18, then you can contemplate that the fear is incrementing. So therefore, a sell-off will start happening in the markets. So you will see the indices trending lower. And as it reaches 20, then you can understand that the market will be entering a bear market. All right, guys, that'll be it for me today. Thank you for watching, and I will see you tomorrow. Thank you. Bye now.